Good morning and a very warm welcome to the first panel of day 2 of the virtual Euromoney CEE forum. My name is Lucy Fitzgeorge-Parker. I'm the editor for Central and Eastern Europe at Euromoney magazine. Our topic this morning is the outlook for sustainability in the region. And to discuss this, I'm delighted to be joined virtually by a very distinguished panel of speakers. In just a moment, I'll ask them to introduce themselves, but before that, a quick note on the format of this panel. We have 45 minutes for the discussion, and that will include a Q&A session towards the end. So if you have any questions for our speakers, please do send them in. You can submit them via the chat box, and we'll get through as many of them as we can before our time is up. So back to our panel. As I mentioned, we have a great lineup of speakers covering a wide range of sectors and areas of expertise. To start with, I'd like to ask each of you to introduce yourselves, please, to our audience, and also to say a little bit about how your organisation is involved with sustainability in CEE. Heike, you're joining us at an ungodly hour in the morning from DC. Perhaps we could start with you.
Okay. Hi, my name is Heike Reichelt. It's great to be here. So I'm from the World Bank. I head the Investor Relations and Sustainable Finance team in the World Bank Treasury. And the World Bank's perspective to this, I would say, is twofold. One is as a lender to the region. So we finance sustainable development projects in various areas, including climate projects, transition projects, but also, especially recently, a lot of financing of human capital projects in the region. And we also come to it as a borrower, so as an issuer in the market. Raising funds to finance these sustainable development projects. And some of the central banks in the region are our investors, but also globally, investors can buy World Bank bonds and through that invest in projects in the region. So I would say that's who I am and that's my perspective to the panel. It's great to be here.
Great, thank you. Ingo.
Yeah, thanks, Lucy. I hope you can hear me properly. Ingo Bleier, in charge of corporates and markets at Erste Group. We obviously have many roles to play on the ESG front and are very gladly playing those roles. One is obviously on the issuing side. We are a capital markets listed bank ourselves with a number of instruments, both on the equity and the fixed income side out in the market. We are advising clients on the ESG front. We are a lender to many companies, obviously, and to the private sector in general. A big lender to the public sector, who plays an enormous role in ESG questions. We have very widespread social banking activities as well, both through the bank and its subsidiaries, as well as through our key shareholder, the Erste Foundation. I will go into detail on some of those aspects in the course of the discussion today, I guess.
Fantastic. Jenny.
Hi, good morning, everybody. My name's Jennifer Johnson. I'm Deputy Secretary General of the European Mortgage Federation, European Covered Bond Council. We have spent the best part of almost 6 years now working on our energy efficient mortgages initiative, which is really intended to build a new value chain around energy efficient mortgages to essentially deliver a new asset class, potentially for covered bond issuance. On the covered bond side, we've been working around enhanced disclosure to further reinforce transparency underpinned by our covered bond label. So we have a definition of a sustainable covered bond. We're working, as I said, around enhanced disclosure through the harmonized disclosure template. And bringing all of this together, which has been very much managed at a broader European level, we've been working also in the CEE region with a number of banks across the region, and particularly getting a lot of traction in Hungary, together with the Hungarian Central Bank. So I'm happy to comment on all of those a little bit later on. Thank you, Lucy.
Great. Kalin?
Hello, good morning. Thank you, Lucy. And thank you for everyone that is participating in this. As a Bulgarian born in Bulgaria, it's always great to be in CEE conferences. I am the CFO of the European Stability Mechanism. We were an institution that was created in previous crisis 10 years ago, and our goal is to help countries through crises. We have at the moment 5 CEE countries that are member and can benefit from DSM. We were in the beginning probably the most social bond that existed, because we helped countries when no one else could help them and they lost market access. And for CEE countries at the moment, we have a new tool available, which is the pandemic crisis support, which can help them through the COVID-19 crisis, which will be backed by social bonds. So this is, if countries don't issue social bonds themselves, they can go through us and borrow through us. And this is something we opened in 2020 for them.
Fantastic. And last but not least, Borislav.
Thank you, Lucy. Great to be here. My name is Borislav Kostadinov. I'm a director at Finance in Motion, responsible for the mandate for the Green for Growth Fund. As of January 2021, before this, I have 15 years of experience across Germany and Eastern European emerging markets at CEO level, subsidiary and group level for ProCredit Banking Group, where I led the establishment of the green finance strategy of the group and its successful integration in the business model of the group. Finance in Motion is a global impact asset manager with over 2.3 billion euro of assets currently under management in 7 funds, and they're focused on environmental and sustainable economic development projects in low and middle income countries. Finance in Motion is working on closing the gap which exists for thoughtful capital that can understand and absorb risks involved in green and impactful assets. And the fund, the Green for Growth Fund itself, is established in 2009, initiated by KfW and the European Investment Bank, and it's focused on energy and resource efficiency and renewable energy. Through that platform, the vision is to help create a lasting impact on a much larger scale across the financial sector. And more on that, of course, I'll be happy to share in the talk later. Thank you.
Fantastic, thank you. Well, it looks as though we have some really interesting and varied perspectives for this discussion. But before we get into some of the more specific areas covered by our speakers, I think maybe we could start with a look at the bigger picture. Obviously, COVID has had a major impact on thinking about sustainability all around the world, but specifically, how has the pandemic affected the outlook for sustainability in CEE? Ingo, perhaps you could kick off for us.
Well, obviously, COVID has grabbed the headlines over the last more than 9 months already, 10 months now into this crisis. The ESG and sustainability topics overall have not gone away even during that period, I would say. We have seen that in particular from the side of our clients, there continues to be a very significant interest on the issuing front, for example, also with respect to transition on the energy front, when it comes to investments into renewable energy sources. So you may have seen, given all the practical and operational issues that companies and investors have seen, certain delays, but I don't see that the ESG topic would have disappeared from the agenda at all. On the contrary, I believe that people are also realizing that investing out of this crisis means that it may be actually a catalyst now with the massive public support that is also coming with all the investment programs, where we're going to see utilization of those funds to really push forward, in particular on the energy transition front. So whilst COVID has grabbed the headlines, the topic has remained with us, with all the stakeholders, and has grown further in the meantime. So that would be the generalist statement with respect to where the focus area is.
Well, obviously you mentioned the funds. Perhaps we should talk to the man who knows all about that, Kalin. So you are the you know all about how this funding might sort of affect sustainability in this region.
Thanks, Lucy. And I'll start first with Europe and then to CEE, because I think it's important to look at the European Union as a whole. I think in 2020, we acted very fast from a financial point of view with the first 540 billion support to the EIB, to the ESM and the European Commission. And most of this is financed by ESG type of issuances. So the European Commission SURE plan is fully social bond compliant, and they've issued already 40 billion last year for unemployment costs, because a lot of people lost their jobs or needed to be employed. The ESM offers 2% of GDP for medical costs related to COVID, which also will be backed by social bonds, and the EIB issues a lot of sustainability bonds. And on top of that, we agreed on the 750 billion recovery fund. Now, why do I say that? Because a lot of this money, of course, flows to CEE countries. If you look at the SURE plan, a lot of the CEE countries have applied to it, and they will be benefiting from that. And this is very attractive financing, fully sustainability driven. So the way I see it is that even if countries don't issue themselves social bonds or green bonds, they are benefiting through the European institution heavily from social and green lending. And I think that is very, very important. And secondly, and I build a bit on what Heike says, I see in the CEE region also a growth in interest in ESG investment. We are also an issuer like the World Bank. And what I've seen over the last few years, for example, in 2017, well, less than 0.5% of our investor came from the CEE region. 2020, we had almost 4%. So that is almost 8 times more of investments that come from the CEE region into our bonds, which are ESG type of bonds that we are issuing. So I see a growing optimism and interest in this area.
Okay, well, Heike, so do you have any numbers like that, or more general sort of feeling of how the pandemic has affected your work on sustainability, either aspect of it in CEE?
Yes, sure. So maybe I'm starting more generally. I think that the pandemic, in terms of capital markets, has really focused attention on the S in ESG. So while maybe when people refer to sustainability, they previously would have thought along the lines of green. I think now it's very clear that the S component, or the social component, as Kalin mentioned, is part of everything. And I would say that the immediate focus, so the emergency response focus, has been on health projects, but also continuing education projects, and I mentioned human capital, so building human capital. But there's also a huge focus on the term has been building back better. So taking advantage of this, refocusing, realizing that we have an opportunity to do things differently. And there is, this has been mentioned already by several speakers, a focus in the region on energy efficiency. There has been for several years. The World Bank has also been financing several of those projects, but also working with countries on this green transition. And as I said, just making sure that the crisis helps us come out better. So I think that's how I would see that. And you asked about amounts. I mean, the World Bank issues about $75 billion in bonds, in sustainable development bonds, and some of those are also green bonds. And some of that goes into the region. Last year, we approved loans for about 6 billion, and we have a lot of outstanding loans in our portfolio as well.
Okay, great. Well, a couple of points we can come back to there in a moment, but Borislav, just while we're looking at the bigger picture, what, from your perspective, the impact of COVID on sustainability and CEE?
Thank you. For the Green for Growth Fund and Finance in Motion, given that we run public-private partnership models, there's been an interest and, of course, a commitment of our investors to direct capital to meaningful impact. So we were able to raise significant amounts of additional donor and private capital to deploy in the pandemic and post-pandemic operating environment. But if maybe to highlight here, if the pandemic has shown us anything, is that the very strong interconnectedness that we have, and of course, on the financial institutions with which we work, we provide committed green credit lines to them. We've seen, of course, a pivot of attention towards climate crisis and pandemic and post-pandemic management. And here, of course, our role as investors should be to be loud and clear, keep the focus on sustainable finance, demand attention to that. And we see it not as an S in an ESG tick box, but rather as something that should be mainstreamed, and for which you need strong commitment from the financial institutions. And for that, we've also have significant support through the technical assistance facilities, through which we provide support to financial institutions who wish to go green or go greener, and take it serious. But more to this, I can share, of course, later.
Okay, and finally, Jenny, would you have a perspective on the sort of the bigger picture in CEE and how that's affecting? How has the pandemic affected your work in the region?
Sure. I mean, I think a lot of what has been said resonates certainly with us on the kind of broader European level. So, I mean, first and foremost, what we recognized very early on in the pandemic were calls from EU heads of state, members of the European Parliament, and market stakeholders more generally, that the recovery from the crisis should be a green one, or a sustainable one at least, so that we shouldn't lose sight of the fact that sustainability moving forward was fundamental. So any comprehensive plans should certainly ensure the integration of the green transition in the economic recovery. We've certainly seen that borne out in Brussels, where it's still full steam ahead with regard to sustainable finance. We've seen, of course, the Green Deal, the renovation wave, the Next Generation EU strategy, and we're also seeing the momentum from our banks in the region, working on green covered bond issuances, supported by their central banks. Again, I come back to Hungary here, where the central bank has made a lot of effort, or put a lot of effort into trying to support banks, support the transition, and banks are responding to that now, trying to build their programs, looking to understand their portfolios, tag their loan books to understand exactly what their books look like. So I would certainly agree with what has already been said. We don't feel that the momentum has been lost at all. And it's still very much, the focus is still very much on achieving this agenda. And we might come back, Lucy, later on to the taxonomy, which everybody I'm sure will have a view on. But again, this is very much at the forefront of discussions here in Brussels. And certainly no momentum has been lost there, perhaps unfortunately, because it's not necessarily going the way we would like it to go. So, but yeah, happy to comment on those things later on as well.
Okay, well, clearly I think the EU regulation, taxonomy, and other aspects of that are going to be very important in CEE, and that's definitely something we should come on to. But first, I just want to pick up on something that Heike was saying about, and others saying about the importance of the emphasis on the social aspect, which we've seen last year. Now, I think for a lot of people, the main concern in CEE until last year on the sustainability side was around energy transition. And of course, with COVID, the social side has come into focus. And it looks as though now there is going to be more emphasis on combining the two in terms of sustainability. And clearly the first opportunity for that, or the first challenge for that, is going to be the idea of a just transition, because clearly some of the countries in CEE lower GDP per capita than some of Western Europe. So I guess the question was, Kalin, clearly first is the just transition mechanism. I mean, is from your perspective, and sort of from the perspective of EU funds, is that will there be enough support for this in the region?
Well, I first want to say that I fully agree with Heike. We have seen almost 5 times more social bond issued in 2020 compared to 2019. So it means that the S in ESG, which was a bit of forgotten letter, it has really come back, and I think it covers the COVID-19 crisis very well. I think if you look at social, the real growth is in solidarity bonds. So if you look at the biggest issuance in the financing side, it is at the moment the EU SURE program, which is targeted at unemployment and covering the losses that countries need to face. And what is nice, I think, for all 19 countries that now have subscribed to the SURE program is that they can borrow against AAA costs through the European Commission, and for them it's just much cheaper than if they issue bonds themselves. So that is, I think, the advantage. And on top of that, if they want to cover the medical costs, they go through the ESM. So if you look at what really was new in 2020, then social bonds were part of that. And I think that trend will continue as long as COVID is with us.
Ingo, I know that Erste is very involved on, as you mentioned, on social banking. Do you have a perspective on how the sort of green and social agendas might work together going forward in CEE?
Yeah, I agree to what was said before, that the public sector obviously at the start of such a crisis plays a very important role with public programs, in particular for everybody that drops out of employment. We have massive increases in unemployment across the region, obviously. And let's not forget, we are coming from a period before with massive employment. And nearly, if you look at the Czech and Slovak Republic, for example, even concerns that we have shortage of skilled labor in several areas and significant wage inflation. So this has reversed, and hence we are seeing now a lot of those efforts have started in earnest. We have already, before the crisis, built out quite a significant framework when it comes to supporting NGOs on the social front, when it comes to supporting microfinance businesses, and as well, supporting people in financial difficulties. In Austria, we call that Bank the Unbanked. Yeah, we have here something that is called the Zweite Sparkasse, where we support people that have no longer bank accounts with established institutions and need to go back to the financial world through particular support. Before that, however, I think what is most important is increase of financial literacy. With a heavy growth in consumer debt, in personal indebtedness, in particular in boom times, situations like this will now show how important it is that people get a very good understanding of what their personal debt capacity would be, so that we don't have too much of a personal over-indebtedness. Hence, we continue our efforts in all of the countries where we are present, in particular on the financial literacy side. Whilst given the public support programs, we have not yet seen a materialization of all the effects yet. Once all the moratoria and the public support programs are being cut back, and they will have to, for simple, debt capacity reasons that you see on the sovereign front, then I think we will see more of a fallout than what we have seen until now. Yeah? Hence, those programs are very important and will continue to be very active. The other part of your question, the combination with green. Energy transition is a field of massive investment going forward. Investment creates employment. So again, from a generalist perspective, I would see very positive macroeconomic effects out of this energy transition investment. Let's not forget, you have significant amounts of employment in the fossil fuel industry. I think the highest number of individuals employed is in Poland, with more than 100,000 people in the mining and coal burning industry, for example, tens of thousands in the other countries as well. Moving with investment, more labor requirement into new energy or renewable energy sources will be critical. But it is an opportunity, as I've said earlier as well.
Well, Borislav, that's clearly your area. What are you confident that, as Ingo is, that the the transition can be made without sort of heavy social costs?
Thanks, Lucy, for the question. I have to mention here that, of course, the Green for Growth Fund targets 19 markets, broadly defined as EU periphery. So not all of them fall nominally into the CEE category, but in all of our markets, there are subsidiaries of financial institutions headquartered in CEE. We've been very quick to set up a responsive framework to support partner institutions in the current crisis and giving them more tools to finance the recovery. On the social end, again, using the technical assistance facility, we very quickly launched the COVID-19 crisis response program and support partner institutions. If you're a financial institution and you worry about the social impact, first you have to deal with your own stuff and provide quick capacity for remote working facilities that we provided support for in our markets. And as well, another perspective we have, of course, is the green entrepreneurs. Again, through our technical assistance facility, we worked with startups via a so-called early stage green innovation support program to help them for business continuity, because of course they were very heavily hit, including the evolving networks and evolving business models with the pandemic. So carrying on that, we then expanded it further with engaging, for instance, in Bosnia and Herzegovina, beyond the partner institution, working with their, let's say, clients as well. So that is a lot of hard work, a lot of passion and commitment needed, which we have and been happy to provide.
Okay, great. Now, Heike, I said we'd leave all the questions until last, but I see there's one very specific question that's come in for you before we get on to the transition question. But somebody has asked, you mentioned that 6 billion was approved last year. Was that for green finance or specific COVID response financing?
Thank you. So that was overall for projects in the ECA region, Europe and Central Asia, and it was for a mix of projects. And it's actually, I would say, going forward, it's going to be difficult to differentiate COVID financing and non-COVID financing. So I think we just assume that everything is sort of COVID financing or the new COVID financing. Most of that was focused on the areas of building human capital, I'll say. So health projects, making sure that vulnerable are protected, so social safety nets. A lot of it was focused on the sort of the immediate emergency response, but also education. And this is something that we haven't spoken about yet on this panel, sort of the importance of staying connected. So any region or any area that doesn't have access to digital communication is at a disadvantage. So several projects were also focused on making sure that education could continue through digital access. But it is, as I said earlier, and I think this has been said, Ingo also mentioned it, the focus on green and sustainability is very much there. And I also like something that Borislav said earlier, it's not a ticking off E, S, or G, it's all interconnected. And another thing that we've seen is the importance of taking a holistic view. Your question earlier was about just transition. It really isn't only about different industries and shifting to other forms of energy, but it's also about human skills. And Ingo also mentioned this, it's about employment. So everything is very much connected, and taking a holistic view is important. And just mentioning something on the bond issuance side, so the World Bank issues sustainable development bonds, and part of the reason for that is to show that we're taking a holistic view. It's very hard to look at projects only because of a social component or only because of an environmental component. And overall, the purpose of the World Bank is a social one. So everything that we finance sort of pulls back to this social component.
Okay, great. And Jenny, again, looking at the links between sort of green and environmental and social, the E and the S, and the challenges and the opportunities of that. What does that what's the relevance of that from the perspective of your work?
Yeah, I mean, what we've tried to do from the very beginning of our project, and here I'm talking about, you know, our focus on the E, let's say, is to try to coordinate as much as possible the kind of public and the private sectors, because we see a lot of value in doing that. So this is what through our energy efficient mortgages initiative, we've worked very much hand in hand with the World Bank, with the European Investment Bank, the European Investment Fund, the EBRD and others. And in the social space, and certainly in the last months, given the crisis, we have been in very continuous dialogue, for example, with the European Commission on behalf of our bank members regarding, you know, support to businesses and borrowers in financial difficulty. We've had discussions, of course, with the EBA, the European Banking Authority, around moratoria, forbearance, etc. And so it was really, Lucy, to link back to your question about the just transition mechanism, whether this is enough, whether the support that will be provided there will be enough. And I would say we need the private sector to be present, of course, and this speaks very much to Ingo's point. And so it's really about, our role is really to support our members in being present there, in being in constant dialogue with the European Commission. We recently signed up to a set of kind of best guidance principles on behalf of our members with the European Commission around handling the fallout of the crisis as banks in dialogue with borrowers, businesses. And it's been said already. So I've been told before that repeating a good point doesn't make it a better point. But nevertheless, of course, you know, we're also trying to actively bring our banks to the energy efficient mortgage table, contribute to the renovation wave, because of course through renovation you create economic opportunities, as has been said, jobs, etc. So we certainly consider that, you know, our energy efficient mortgages initiative will also potentially be part of, you know, a key element, let's say, of a post-COVID recovery plan because of its benefits for stimulating economic activity. So it was a bit of a garbled way, Lucy, of showing how we're trying absolutely to go hand in hand with public authorities, international organizations in supporting not only the energy transition, but also recovery from the COVID-19 crisis. And the two go hand in hand inextricably, almost, as has been said.
Okay, great. Well, Jenny, sticking with you, actually, I mean, you mentioned talking about the public sector and the impact of regulation specifically, and you mentioned the EU Taxonomy, and clearly that and a lot of other EU regulation around ESG, particularly environmental issues, are going to have a big impact on the region. Now, you said you had something to say on that, and you sound as though there were some things you were maybe not so happy about the taxonomy. I know there's been some criticism of it. Is that more generally, or is it specifically in relation to sort of some of the countries in CEE?
Well, I mean, I think first and foremost, it's more generally. So, I mean, all member states, all markets will be touched, of course, by the EU taxonomy. Potentially those markets with, let's say, a less well-performing building stock, or where renovation rates have been particularly low, will be affected disproportionately. So we'll perhaps suffer more, let's say, from a wrongly calibrated taxonomy. I mean, just to paint very, very briefly the picture, we see a vast array of initiatives from the European Commission in the area of sustainable finance. So to name but a few, we have, of course, the EU Taxonomy for Sustainable Activities. We have the EU Green Bond Standard. We have corporate disclosure of climate-related information, EU climate benchmarks. We have sustainability-related disclosure in the financial services sector. We have a platform, a sustainable finance platform, which is trying to make sense of all of this. And so it's a very complex landscape, I would say, which is all very interrelated, overlapping, but which has the potential to radically impact on the business. And let's say on a business which is still relatively fledgling, you know, it's still a relatively nascent market. And so we have been, on behalf of our members, working very hard to try to manage or monitor this very kind of complex landscape. And we've been focusing, particularly in the last months, on the taxonomy, because the taxonomy arguably is really at the center of this. So for those who are perhaps not entirely familiar with what the taxonomy is, it's essentially, let's say, a catalogue of environmentally sustainable economic activities, or it should be, let's say. And at the time of speaking, so the European Commission is trying desperately to define what the technical screening criteria will be. And this, of course, is proving to be an extremely challenging exercise. The European Commission issued a consultation on a draft set of criteria and received 46,000 comments, which it theoretically had to review over a 9-day period, of which 3 of those days were Christmas Day, Boxing Day, and New Year's Day. So, I mean, just to give you a sense of how absolutely fundamental this is for the market. Our particular focus has been, of course, on the real estate sector. So what kind of real estate activities can be defined as taxonomy compliant? And within this, the big concern is what buildings, let's say, will be compliant or not, and then, of course, the activities financing those. The European Commission has taken a very, very ambitious approach. So they consider only the very best performing buildings to be taxonomy compliant, which from our perspective, given that 95% of buildings in the EU are not well performing, means that the actual eligible assets for energy efficient mortgages or covered bond funding or bond funding would be greatly reduced, and let's say compromising the ability of banks to finance this energy transition. So we've been working very hard to try to, let's say, agree on some more reasonable targets. Now, we don't want to compromise on ambition, but we need to be realistic. The market is where it is, and we need to gradually build the market and bring the market to the point where the European Commission would like it to be. So there are a lot of challenges, Lucy, around this, but it's clear that the taxonomy will be fundamental. And as I said, regions potentially such as the CEE region, which may have a building stock which is less performing than, say, in Denmark or in Sweden, will be perhaps more negatively affected than those markets where we have a stronger building stock. So we're working very hard on this. It's a really key priority for us. So I would say watch this space. We should know in the next couple of weeks what the final outcome will be, but it proves to be a tricky one moving forward.
Kalin, you had some thoughts on this?
Yes, thank you, Lucy. And yeah, maybe I'm a bit more optimistic than Jenny on the EU taxonomy. And I can explain why. A bit like what Heike mentioned, what I felt as a difficulty over the last 10 years is that the ESG market was very narrow. So it was you either issue a green bond or social bond, but many issuers like ourselves or like the World Bank or the EIB, in a way they are ESG issuers. So the green bond principles of the ICMA, the social bond principles of the ICMA are very good for project finance. But if you go beyond that, they actually are not working. So what the EU taxonomy tries to do is to look at really institutions, organizations more broadly, and how do you score on the E, on the E, S, and the G. And it is for us very close to our heart, not only as an issuer, but also as an investor. We have committed ourselves to the United Nations Principles of Responsible Investments. 69% of our 80 billion capital that we invest is ESG invested. And what we try to do is to develop our own scoring because that was lacking in the market. So what I like about the EU taxonomy is that it is a solid, very granular regulation that is put in place. It's a bit like what is organic food. There is EU regulation on what organic food is, and we need to have that for finance. And why should Europe lead this? If you look at the trillion plus of ESG issued bonds in the market, 53% of them are in euros. So Europe is leading in the world in this space. So we need to have some sort of European regulation on that. And it's actually good that Europe is a leading force in this space.
Well, Ingo, you as the leading bank in CEE, largest bank in CEE, obviously banks have a tsunami of regulation coming their way from the EU. What do you think about that in CEE? Do you think this is all good for the region? Do you think that some of this is perhaps a little advanced for a region that has not always been at the forefront on these issues?
Yeah, a number of questions within one. First of all, the first connotation I have when I hear the word taxonomy is bureaucracy. We're getting, you call it a tsunami. we are getting way more requirements when it comes to disclosure, not only on our activities, but also what our clients are doing. I'm quite concerned that we are running into a certain consistency issue. If I take the example of Jenny, what type of houses are allowed to be built or allowed to be financed? On the one hand, regulators want us to finance certain types of buildings. Local construction laws allow certain buildings to be built. And as long as local construction laws would allow certain buildings to be built, you would assume that you can also finance those because they're allowed. So I would tend to work with incentives and make sure that all those programs coming out of the European Union are really consistent, right? So if you want to use the banks as a transmission mechanism, don't forget that we are within an enormous area of tension. And that leads me, Lucy, to the other part of the question. Within CEE, obviously, where there's a high dependency still on old, let's call it, energy sources, where there's also, in many parts, outdated infrastructure. It is very important that we promote financing for an energy transition, but we need to do that also with respect to local social elements, in particular employment, as I've mentioned earlier. And we need to do a proper planning that is consistent through the organizations. It is, for us as a banking institution, very difficult being pulled into one direction out of Central European local necessities. On the other hand, out of the Brussels regulatory view into another direction that is maybe not yet coordinated with all the local authorities. Would be very good if those would be consistent, because we need to operate here across a region where the local view may be very different from the central view in Brussels, and there we need consistency. We have been working on the ESG front many years ago, in particular on the asset management side. So we see the strength on the investor demand. One of the best performing products we had last year was a fund that we managed together with the WWF, and not only with a very good stock performance, but it has grown massively in assets under management, close to €1 billion already, from a couple of 100 million only 2 years ago. So we see that private sector interest is there. We want to utilize this, but we need consistency in the regulation, and we certainly don't need too much of a bureaucracy within that process, and that is certainly a concern that we have in that context.
We're running a bit short of time, but I would very much like to put that to Borislav, because obviously this is something that I'm sure you have some views on. Do you see particular tension in CEE between local conditions and the regulation, top-down regulation that's coming from Brussels?
Thanks, Lucy. Yes, I'll try to squeeze in the time. Well, basically, I see sustainable, and I mentioned it earlier, I see sustainable finance has to be mainstreamed if you want to have a successful and economically viable banking business models going forward. So I think that should be the starting point. And I do see a certain tension. At the same time, I see the regulation providing a very important platform to basically kickstart the banking sector going into that. And of course, for that needs a change. That change has to happen from inside. And a change in a banking space that happens from inside can only be driven from the top. So you need a buy-in at a very senior level, which comes with education, with awareness, with conviction, and with, of course, exposure. I'm sure banks that don't embrace that will find challenge in the future retaining and acquiring staff. I think there will be a war for talent in that space. I think future bankers will go to banks and to managers that embrace this type of thinking. And of course, we as Green for Growth are thinking to and are providing a platform for deep greening banks into embracing via our technical assistance facility into becoming greener and basically wanting to change themselves. And of course, it will mean a change of doing business in a way. it would mean banks have to categorize and prioritize business, not only according to their performance, but also according to their focus on sustainable activities. And I think it's totally fine. And for the businesses, that's going to be fine. They would be the ones that would survive in the long haul. They'll be the ones that win more customers. And they'll be the ones that would basically inspire their staff. So I think, of course, the devil is in the detail, but I think the direction should be clear. And I think for this, I'm very thankful to the to the initiative.
Okay, well, that brings us nicely to one of the questions that we have had, which was specifically for Ingo. I think we're probably only going to have time for one question, as I see we're getting a bit tight. But I think this is quite indicative and interesting for the region more generally. The question was, how does Erste's ESG footprint look today compared to 2 years ago, and how do you see it 2 years from now?
Yeah, I try to be brief. We had, I think, a lot of progress recently on the diversity front. Yeah, we've been speaking now about energy transition, the green side of things. We've put also a focus on increasing diversity. So what has changed most within the last 2 years, I would say, beyond the activities we had in green finance was, I think, on the governance side, really within the organization. We had several board changes. So diversity within the group has grown. Going forward, I think where we'll see the biggest change is clearly on the, so that will continue on the diversity front steadily, but in a more dramatic shift, I think it will be on the environmental and social front. Social because of the effects of the pandemic, where we are being challenged as one of the big stakeholders. We discussed about that. And most dramatic on the environmental side, because we need to work with the stakeholders in Central Eastern Europe in getting, the energy transition of PowerPoint into reality. Yeah. And that is, as I've mentioned, with all the stakeholders involved, a very difficult process. In particular, as within Europe, we don't even know yet whether we believe nuclear is green or not, right?
Okay, great. Well, there's lots to think about and there's lots more to talk about, but sadly we are out of time for today. So thank you very much to all of our speakers, particularly Heike for staying up so late to be with us, and to all of you in the audience for joining us.